Good morning, 5:58 a.m. Pacific Standard Time. Pre-market is the subject, and pre-market, how do I take advantage of pre-market, and how do I understand gap open up pre-market futures? And it's all related to pre-market futures. From where the closing prices were on Google, this is the gap open list right here. 16, 20, 14, 50 on Priceline. Look at that. Apple, Amazon. Look. Very nice. This is part of what we would describe within the actual trend cycles from the liquidation down to the support levels that we talked about, is where does that gap come into play? And it's happening on a Monday. And you haven't seen one on a Monday for quite a while. Every time you had the previous bull cycle runs, what ended up happening is that every Monday was coming around and everything was being sold down in the austerity plan as it was. But this is a Monday, and we are all bullish about people shopping on their computers and going out to malls and providing the economy some kind of Christmas spirit, which is wonderful. Trade management follows that on these opening gaps, there is a fine thing that the MMTs go through, and that is understanding what that closing bell at 563 was to where the gap open highs are right now. That is 16.3 ratio. That means that we were talking about over the weekend during the Thanksgiving weekend, and today is Cyber Monday for everyone. So cyber stocks go higher. We're going to look at where that short side of the tape comes in. We'll be looking at various elements in the pricing structure at support lines and resistance lines, monitoring the net weighted buyer and seller, what the bid and the ask, is it going to be extremely wide or is it going to be contracted? Another thing that we're covering on 11/28 at 2011 is the increase in pre-market volume. In other markets, when you had the selling, you never had a lot of volume. And one of the things that we've been doing here, here's a contracts that we looked at over the weekend, over the Thanksgiving weekend, that is, how they had marked down all of these calls and how we're going to find a value in them. And now we open up pre-market with the $16 gap. That means that the calls are going to gap up in price because of the pre-market gap up in the equity is going to raise this price in pre-market before the opening bell in 29 minutes on a Monday. What we will be examining carefully is where the equity hits that wall of resistance relative to the markdown. So when we hit the intraday highs in these gap open ratios, that's what this is. But you have increased volume. That means that the short sellers are going to want to buy the cover. And we'll be looking at in other names like Apple, 179,000 volume. Here, we can take a look at a few more. We can take a look at Amazon.com. So we got 58,000 shares. And we have a fairly decent gap open. When this one pulls back to support level, this thing is going to break higher. It's going to be a Cyber Monday. We covered it over the weekend in our training. As a matter of fact, we even put together an option put and call strategies. They're all right here, right now. And so what you can look at, here's all of our call strategies that we did over the weekend. They're all right here. Amazon.com. What you'll be looking at on Amazon, like all of them, is how they mark the put down. Remember, we were too imbalanced between put and call ratio. Short-term put-to-call ratio, meaning that the value of the puts were way up there in that inflated price zone, my friends. And that means that the call side, as we covered during the Thanksgiving weekend, we covered all of those videos are there. The last live trading video, remember this is live pre-market, but I'm going to tell you, all eyes out on that bellwether, Amazon.com. When it pulls back to support levels, Leo's going to be all over that. That's that gap ratio. So everything's a gap open ratio. Now, the buyer. Is that buyer going to want to come in and start buying up the good quality names and move them higher? There's every reason for the three that we chose over the weekend. We chose Google, we chose Apple, and we chose Amazon, and we said just in those three only is all we needed to focus on. And those three will make a lot of money. And they will, because we were oversold. So the handicap is that this, see, they short it down in pre-market. So these gaps are going to be shortable. So they're going to mark the put side down. When we hit the high, we'll hit various peaks of highs. It's where that buy to cover short seller is called SMF BC, buy to cover now. So that BC trade is in there. That short interest is going to get stopped out on the opening bell in 25 minutes. As the bear covers their positions, they have to buy to cover. That is how they go higher. We will be monitoring carefully what the level is of the pullback. It could be that they're up there and they stay most of the day. Ideally would be that you stay up there above 85 in your platform, MMTs, in the IR, with elevated TR levels, trend ratio levels are elevated. That would mean that you would be building bases from the gap open, from the close. You will have a short sell down to support and another bounce. However, 15.50, every one of these gaps is where the put side over here is going to get marked down. The 580 put on Google will, the 585 put. Here's that 370 call that we liked right here, up and out of the money in this level 2 right here. Here it is, 9/12/90. That's a good one. It's a 12/17. It's a 370 call. You'll have to wait for Apple to pull back to support. They will mark the calls up, but remember, they're only marking the calls up back to their last sell down level in the price premium in the option pit. It's very clear that you'll see that on the opening bell when it comes time to have an increased pre-market futures gap volume. Pre-market futures gap volume. Once again, pre-market futures, it's a gap with increased volume here. Every one of them will hit their intraday high, and then they'll pull back on their first peak on a reversal to support, bounce, and make other highs. If the seller is going to liquidate into the high, you will see an immediate red bar reversal, and it will be at least a 2 teeny to 3 teeny qualifier, but it would be a red reversal bar right next to the last intraday high green bar. You would have a red bar descending in value 2 teenies plus in your SMF platform. And if a teeny is 80 cents, 3 teenies would be $2.40. So you're going to be looking at that opening exhaustion gap. It's exhausted. You can see here when they get exhausted. Now price line is right up here. I want to cover this price line. We covered this stock that it was oversold, and it is. And one thing that we did is that we're going to be looking at price line 470 calls, and we're going to be looking at 480 puts, 485 puts that were in the money. Over the weekend, I clearly had stated how they had marked the net change mathematically down in the deflated call side of the market. Dollar priced had been marked down. And that 12-2 contract was already marked down $6.10 right here. And on the opening bell with the increased volume, you're going to notice where they open this contract up and see if it's above 1230, 1250 were the last highs. If we can get into this thing at about 675, that's probably not a bad limit order. But once again, if it's a sell gap, you would have to limit, cancel all immediately if it was a sell gap. You can't sit there and hold on to the price at that point. No, you would have to cancel all orders. Because if you put a limit order out there now at 675, 620 is the last print. But how do I trade pre-market futures? Every day. And how do I trade upside volatility and downside volatility and price action? How do I really understand the core inner mechanics of the price action within the exchange model? And these are all exchanges: options, equities, price gap opens. How do we work with those? And how do we make good of it? Watch your 485 put. They're going to mark that premium down. Remember, I clearly over the weekend showed you where all the calls were marked down. The $500 call here was marked down 59% on Priceline. 50% marked down on the 475 call. And for my goodness sakes, let's take a look at the name. And remember, MMTs, happy holidays to you and the rest of the world. Look, 459, you're gapping up for right here in that level 2. This is a special pre-market gap open up, holiday. Everybody's there, but you have to look at where that exhaustion is and where those pullbacks are going to be. All right, and here's the call and put strategies right here. We have them. Watch them. They were marked down considerably, especially that 470 call for 12-2. These are weeklies right here, 12-2s. These are the monthlies. That 500, 1217 could go off real well. You know, remember one thing though. Look at the dollar ratio gap on that. They're going to gap the calls up and mark the puts down. Watch the price lines of the world. Do not give up on those, whatever you do. Okay? And once again, here is the ratio gap up from the previous day's close. You will have to wait for the pullbacks, because what the market makers will do on the first pass of that opening bell is short that down to those teeny reversal support lines, and then you would be looking for an immediate 3-minute buy action bar to confirm that you're above the previous half closing bar by 2 times the volume, and not only that, 3 teenies breakout in your SMF market maker application would confirm just that. So Amazon, the Apple will pull back at some point. The price line, that thing, we've seen it break out $30 in a day. Been involved in plenty of them. All eyes on that price line. All eyes on that Google. Then the short seller has to buy to cover at the open. If the short seller doesn't have any fear, then he's not going to buy to cover, and you would see an immediate sell gap right into that opening bell price action. That's scenario A. Scenario B, the bear has to buy to cover. Scenario A is that the bull would chase it and the bear would sit on the sideline and not do anything and let the position go against him. That is possible. Bear and bull do both the same behaviors.